Today, we are going to talk uranium, and to do so, we have a very special guest with us, Mr. Amir Adnani, founder and CEO of the largest North American uranium company, also chairman and founder of several other companies, including Uranium Royalty Corp, World Royalty Corp, World Mining Inc., and so on. He's the Elon Musk of the mining industry. Amir, thank you so much for coming to the show. How are you today, sir?
Thank you. Thank you for the kind introduction, and great to connect with you again.
Yeah, well, thanks to your contrarian way of thinking, you are one of the very few people that I saw smiling and happy when prices were depressed. I'm very low, but you seem very excited and happy now too. So, as it's the first time you're in the show, Amir, I would like to spend the first minutes for the audience to know you a little bit more. Maybe you can tell us pre-Uranium Energy Corp, what did you study? Where were you raised? How were you in your 20s? What motivated you? And bring that to the present. And yeah, now it's $4 billion market cap that you have combined, and some of the lessons that you learned over your career.
Yeah, with pleasure. I think, for me, from a standpoint of what always interested me, right, from a young age, was business. I just loved the idea of business and being in business. And I guess we sort of have a term for that. We say entrepreneur or entrepreneurship. But that was something that I was always interested in. When I also kind of think about what became interesting for me as a young adult, it was really the commodity business and the hard asset business, and really immersing myself into the world of mining and commodities. And so when you kind of start to think about what the takeaways are, if you have a sense and interest in business and you have a sense and interest in the business of commodities, you have to really become a student of commodity cycles, because the nice thing about the commodity business is that it goes back for centuries and centuries, and it's how the history of human civilization has been built, right? It's not just today that we mine gold and copper. If we go back 3,000 years, the Persians were mining gold and copper to build their empires, and so were the Romans, and so on and so forth. So it's something that has incredible history and relevance. And so for me, I think it was just kind of the perfect really place to go to university. I went to the University of British Columbia in Vancouver, BC. Why is it a perfect place? Because Vancouver is really one of the global hubs for the mineral resource business. There's a very strong resource exploration, development, and understanding of the commodity cycles in Vancouver. Vancouver doesn't have many industries, but the one industry that it does have in a big way is mining and junior mining. So I thought, when I look back, I think those were all things that really helped combine and bring me to a place where I can then express myself as an entrepreneur and doing the things that then I've done now for the last 20 years to build the businesses that I have that you alluded to. And again, I think the key takeaway for me was that if you're going to be in this business, and if you're going to be successful in this business, you had to be a contrarian, and you touched on that as well. That the commodity cycles are basically your friend, in the sense that if you have a cycle that's out of favor because that commodity is oversupplied and prices are depressed and prices are below marginal cost of production, that's when you buy. And you look to develop and produce commodities when they basically move up in the cycle and are above incentive prices and marginal cost, et cetera. So in a way, you could argue it's not rocket science. And in a way, you could argue it's more about emotional and financial stamina than anything else to be able to act as a contrarian, right? And that, I think, is kind of what brings us to probably the uranium business, because we had in uranium post-Fukushima an unusually long bear market. You could have been a contrarian for a long time, but it was very challenging, very testing for investors and for the companies and people that were involved in it, because it wasn't a regular bear market cycle. It was one that was caused by an accident in Japan the Fukushima accident that then caused the regular cycle that the uranium market was in. We were actually in an uptrend before that accident happened. It sort of ended that bull market prematurely. It forced us into a bear market. It forced us into a situation where there was now weak demand and too much available supply. Lots of other dynamics were at play with contracts that had been signed that kept certain producers overproducing into what was already an oversupplied market. So that became actually, I think, one of the most epic bear markets you could have had. Unusually tough, unusually challenging. But then now here we are, right? But I think it still goes back to the same premise that we talked about. It still took the same principles to be successful during that bear market, but the ultimate success is reflected when you come out of a long bear market for any commodity.
Yeah, exactly, and that's what what happens now. You are a success overnight for most of the people, but this was the long-term approach. 20 years in the past, you decide, okay, uranium is a lot out of favor. Supply cannot reach demand. Can we talk a little bit of the uranium market? Because as you are the CEO of the largest North American, what is going to be a producer in in a few months, this was an almost 25 years prolonged bear market. What do you mean by that? And where do you believe we are in the cycle? What are your takeaways of the recent price movements from $50 to almost, well, $100, right?
Well, I think at the end of the day, you have to look at the fact that the mining business is a very capital-intensive business. And it's a business that takes a lot of capital, and it requires time for that capital to be deployed for mines to be built successfully. And when we talk about mines, we talk about mine life, and mine life is measured in 10 years and 15 years and 20 years. So everything about the mining business is a long-term and capital-intensive business. And when you look at the uranium market, and this is something that I'm sure we're going to talk about, but I often talk about what the spot market for uranium is doing. You have some of the players in the industry that talk about contracts. I don't think these are two different markets. I think they clearly feed off of each other. Whatever pricing you can get in a contract is influenced by what's happening in pricing in the spot market. But when we look at the spot market for uranium over the last, not 11 years, but if we look at it over the last 30 years, it has been depressed and generally too low to encourage new companies to come into the uranium business. Almost all the uranium mined in the world for the last 30 years was done by 4 or 5 companies, all of whom are either government controlled or used to be government controlled. And on top of that, we had obviously the HEU treaty, the highly enriched uranium treaty between US and Russia. That was in essence a form of a mine where close to 20 million pounds of uranium came out of these Soviet era warheads from the end of the Cold War until 2014, which was the largest source of supply in the market, right? Equivalent to a mine. And when we look at previous bull market cycles, like the rally in 06, 07, it lasted a total of 1 year. When we look at the bull market in 2010 pre-Fukushima, it lasted for a total of 6 months.
Yeah.
So we go back to the premise that if this is a long-term business, which is very capital intensive, in the last 30 years, we've had what? A combined positive period of maybe 2.5 years versus 18, versus in the context of 30 years, that's nothing.
Yeah.
And the other side of this is then I would conclude that the uranium exploration and mining business has been undercapitalized for this long period. And that in a normal market, you would see more than 5 producers globally. You would see a robust set of producers, a robust set of developers, and a robust set of explorers. And we simply haven't had strong uranium prices sustained long enough for that to be basically realized. What we have today, I think, are the conditions that basically help foster that kind of future. Because what we have today is we have geopolitical problems. Today we have the fact that end users of uranium want a diversification of suppliers. They don't want to buy all their uranium only from Kazatomprom and Cameco. They want to see more producers. They want to see diversification. They want to see diversification of geography. So today, I think we have an environment where uranium prices have now moved into a triple-digit kind of range. It just got here. And this is going to be sustainable. And this probably is going to go higher. And I think what's going to come out of this is the uranium industry is going to get recapitalized. It's going to see more and more players emerge. So it's not just a small club. It's going to become a proper big industry. The spot market is going to become a lot more liquid and active because that's the best gauge of seeing day-to-day pricing. Transparency and price discovery is in the spot market. And that's going to, I think, help the uranium market grow up, right? Grow up from being this sort of quasi-government controlled business, which it still will be because governments care a lot about uranium because it's a strategic commodity. But it's going to, I think, really evolve into something that's more market-oriented with daily price action, with see-through pricing, which organizations like Sprott are now providing, and you're seeing that transparency around it. So that's kind of what I mean when I say I think we've been in a 30-year bear market, and reflecting on that and kind of thinking about where things are heading. What are some of the trends that the industry is going to need to see, and then how that's going to shape the uranium industry, explorers, developers, and miners?
Yeah, you summarize very nicely what has happened on the uranium sector, that actually supply couldn't reach the demand. For the last years, the inventory hangout was the driver of the price going down. Now, and we had Scott Melby on the show. He said, this is not anymore an inventory-driven market. This is going to be a mining companies that needs to build uranium mines and sell it to the spot price. Also, speculators could say that the uranium demand was going lower, but this is not the reality. Actually, in the COP28 that you were last month, I believe, they were an agreement to triple nuclear energy, while the supply, even though the prices have skyrocketed to almost 100 pounds level, there's an imbalance there between supply demand, and the demand is growing. I would like to expand a little bit of the future of small modular reactors, because you have put an agreement with UEC or with TerraPower as well. Do you believe this is going to be the future, and this is where you are putting your company pretty much?
Well, listen, I think the negative on SMRs would be the fact that we currently don't have any of the proposed SMR designs by many different companies up and running and commercialized. That would be the negative. The positive is that when we look at SMR design, we realize that while there isn't one operating on Earth, they've been operating, and what I mean by Earth is I'm talking about like on ground. SMRs have been operating in waters and submarines for decades. That's how submarines are powered. That's how space travel by NASA was powered, was with SMRs. So while it's a kind of a new concept to put it on land, it's not a totally new technology. And when we look at the forecast and estimates in the US, for example, the Nuclear Energy Institute is forecasting that in the next 20 years, there could be over 300 SMRs built in the US. 300 SMRs would generate potentially, based on the NEI forecast, over 90 gigawatts of nuclear generating capacity. What does that mean? Today, total generating capacity of electricity from nuclear in the US is over 90. So SMRs can potentially double the electricity generation from nuclear in the US. In the last 20 years, we never had a forecast like that. In the last 20 years, if you said to someone, where is the demand growth for nuclear energy in the world? The answer was China. right? China is where you would see these big growth targets. The US was basically just steady Eddie, just going flat. And it was just, there was just no growth. And now all of a sudden, there's growth like we've never seen in the last 20 years in the US of doubling. So I think the context is important, right? That while SMRs are definitely an emerging source of demand, we're in the early days, but incredible amount of money and energy has gone into these companies. They're backed by Silicon Valley entrepreneurs and billionaires. So then you ask yourself, why are Silicon Valley people getting behind SMRs? Why is Bill Gates and Sam Altman and Elon Musk, why are these guys getting behind SMRs? What's going on here? Then you look at what's happening with artificial intelligence. Artificial intelligence and the need to automate all these businesses from Amazon and Google and Microsoft down requires so much energy that we've never seen before. The energy consumption of one AI-generated photo is the same as you recharging your iPhone for a full cycle. So you just think about the step change in energy consumption that we're going to face in the next 10 years. And companies like Microsoft have announced that they want to invest in SMRs as a way of powering new data centers that are going to support their AI aspirations. So then you start to kind of say, okay, this is again like something we've never seen before. It's not typical power needs of the grid. It's a whole new emerging field of demand of new data centers for AI goals and objectives of the biggest companies on the planet. And they're shifting their mind towards SMR as a way of powering that. So at UEC, we're big believers in this future, but this future isn't what's driving the uranium price today. As you pointed out, the uranium price today is driven by the fact that today, this year, we have a supply deficit. That for the last 30 years, we've consumed more uranium than we produce. We're not just in a deficit today. We've been in a deficit for as long as you look back, because there's always been above ground inventories that have helped balance the market. And hence, your comments about that this is not an inventory-driven market anymore. This is a production-driven market. That is a reality today. So whether because of COP28, the world triples their nuclear energy by 2050 or not, whether SMRs ever come into reality or not, it doesn't matter, because we have a deficit today and it's a production-driven market today. The market is rebalanced, inventories have been drawn down, and that's what I think makes it very exciting. But we were very pleased as a company at UEC to team up with TerraPower. We think they're one of the most advanced players in the SMR space in the world. They happen to be building an SMR in Wyoming, and they happen to be backed by Bill Gates, who's the chairman of SMR, TerraPower, and the United States Department of Energy, who's invested in TerraPower. And we believe they're the most advanced. It's beautiful that it happens to be in Wyoming, where we also are restarting our production. And we demonstrate that the state is definitely at the front edge of both nuclear technology and uranium mining. And I think it's just a great relationship that we've built with TerraPower, and we'll supply their uranium as they need it, and we'll go from there.
I actually, Sam Altman that you refer and Bill Gates, they always say abundant intelligence with AI and abundant energy, right? Cost-effective energy, and that they're referring to nuclear energy. I always say to college and people that they started to invest and focus on cryptos or NFTs or artificial intelligence. I say always, look to uranium. I think it's a better asymmetric way of investing in that movement. But yeah, I would like to know how is over there in the US, because I know that the US is the largest import, almost 50 million pounds of demand, and actually zero production yet in the US. And you are trying to, well, the US government is trying to ban Russian uranium imports from Russia. Also, the Department of Energy has put a lot of budget, to bid for uranium. How are things over there in the US, and how do you position your company to leverage that movement?
Well, it's amazing, because from a political point of view, right? If you were in the uranium business for the last 20 years, we always felt that we needed a Republican in the White House to get more support for our industry. And we've seen unprecedented support for our industry with President Biden, a Democrat, in the White House. We have today, like never seen before, bipartisan support for nuclear energy and the need for a domestic nuclear fuel cycle, which is uranium mining, conversion, and enrichment, to exist in the US. Today, you can walk into the offices of members of Congress and be welcomed, again, regardless of what the political point of view is. Because I think that there's a few mega trends and issues globally that ended up intersecting each other at the same time. It was the broader acceptance and the need for decarbonization, and the issue of Russia invading Ukraine, which brought to the forefront of everyone's mind the need for energy security. And this bodes extremely well, again, for nuclear energy, because uranium is the best source, the best element that we have on the planet in terms of the amount of energy that you get from the splitting of the atom in the uranium and the amount of energy you can create. Nothing matches that. And so nuclear is an incredibly efficient way to get zero carbon, but large energy in one place. And so the shift in attitude, I think, in Washington and the US is, again, historic. It's noteworthy. You saw President Biden sign into law the NDAA bill in late December. There is, an effort, a bipartisan effort to stand up a nuclear fuel cycle in the US. The Strategic US Uranium Reserve was created. We were honored to be a supplier of uranium for the first purchase that they made, but it was only a $60 million purchase that we were a part of. That program is expected to be a multi-billion-dollar program. So
is it
these
planned
are early
for?
days.
Oh, sorry, Amir. Is it planned for 2024 already?
We're waiting for the details on that, because every year there has to be this process of what they call appropriation, where budgets are set for the government to be able to buy something. So we're waiting for that information to come out. But ultimately, look, So that's go ahead.
Yeah, sorry, Amir. Because when the price was at 50, they paid something like almost $70 of premium at that time. Now that the price is 100, do you believe this is going to be continue a premium on US origin, because that imbalance between supply and demand on the US?
Yeah, I believe there will be a premium, and for the point that you made, because the US is currently consuming over 45, add it all in what government needs, probably close to 50 million pounds a year. Production is less than 1 million pounds. So this is the biggest deficit anywhere in the world.
Yeah, that's why.
And the way the US government has mandated its purchase of uranium for the strategic reserve is that it has to be US origin. It has to be from a US mine or a US-based company with production in the US, et cetera, et cetera. So clearly there's going to be a premium, because demand's already at 50 million, supply is very little. So until US supply and production increases, which it will in the coming years, this will be a big growth industry. The price is going to carry a premium. So yeah, and you're right, the premium was about 20% on the last purchase that the government made, and that was a small purchase, and the market wasn't, I think, as tight as it is right now when they made that purchase. But again, the reality is uranium is such a small percentage of the overall cost to run a nuclear power plant that when you think about it long term, buyers of uranium are not price sensitive. According to the Nuclear Energy Institute, last year, nuclear fuel was 5.4% of total operating cost of a nuclear reactor. That's nuclear fuel. So that's not just uranium, that's conversion enrichment as well. Uranium would be a third of that. So that's less than 2%. So uranium, the uranium at $100 a pound is less than 2% of the operating cost of a nuclear reactor.
Wow.
So there's price inelasticity. If you compare that to natural gas prices would be over 70% of the cost in a gas-fired power plant. So that's why I think you have more of a strategic need to secure uranium. because again, the US is really trying to repatriate the fuel cycle from Russia, become self-sufficient. They don't want to depend so much on Russia because Russia controls half the production in Kazakhstan through ownership that they have with Rosatom. They take the uranium, they convert it, they enrich it, they sell LEU to the US. They're the biggest source of supply of low enriched uranium, LEU, to the US market. So the US has to basically address this dependency they have on Russia. And it's ironic because the US criticizes Germany for being so dependent on Russian gas, but fails to highlight that US is equally badly dependent right now on Russian LEU, or low enriched uranium.
Yeah, actually, it's an anecdote, but last year I was in a meeting with a conference that some representative of German council and the US, and the German speaker was telling why the US blame us always for the nuclear energy, and if you are doing the same, right?
Yeah.
But you touched a really nice point of the elasticity and malleability of the uranium prices. Are you in the camp that uranium prices can go as 500? Some crazy people on Twitter post $1,000 pound of uranium. Are you on that camp?
Well, I think the one camp that I've been very clearly in, and you've heard me say this, is when uranium was even as low as $20 or $30 a pound.
Yeah.
There's lots of interviews with me where I said that I believed uranium prices should go to $100 to $200 a pound.
Yeah.
Because that was basically looking at the previous cycles of 2010 and 07 and just simply adjusting it for inflation. So I took the simple view that said, look, guys, like, if we believe uranium is going to end up being in a deficit and prices need to move up to incentivize new supply, the last time this happened, within the last 20 years, let's look at that as a clue to where we think things can go. And so the 2010 price gets us to 100. The 2007 price adjusted for inflation gets us to 200. We're inside that range now. Now we're at 100, and so we got to the range. And so beyond that, I would say, and I would say, first of all, this is fine. I don't need, at this point, I don't have further thoughts about whether I think it's going to go to a 500 or 1,000. And I haven't really said that before. I think I'd like to see the price really stabilize here. I'd like to see the price perhaps move higher. I think we're probably going to see $200 very soon. And I think the reality is that, again, all of that won't make a difference to the bottom line of the end users. Now, the unknowns are going to be this. In the last 20 years and in previous cycles, we have to compare the cycles. Is this cycle different and maybe potentially stronger for price appreciation than 2010, 2007? I would argue it is. In previous cycles, Russia was an acceptable supplier to the world. Right now, the West wants to basically reduce their reliance on Russia. In previous cycles, we didn't have out of control inflation. Inflation is still a problem, and this is a capital intensive business. If you look at copper mining and gold mining and lithium mining, there's inflationary pressures in the mining industry. We have a high interest rate environment. Until we get rate cuts, we're in a high interest rate environment. In the last 20 years, uranium industry had the benefit of low interest rates. And so the industry, I think, faces many headwinds as it looks to respond to the need for new supply.
Yeah.
And these headwinds, I think, them would lead you to think that there's more bias to the upside in the uranium price, that higher uranium prices are going to be here for longer. I think also the fundamentals that we're seeing today for nuclear energy and the uranium industry are the best we've ever seen, like ever.
Yeah.
And so you simply have, I think, an environment where I think it's conservative to think that price can go to $200. I think that's conservative.
Yeah, it is.
Beyond that, beyond that, we can get fun, and it can be fun to speculate and all of that. We'll let people on Twitter do that. But I think also, I'm building a business that I thought was going to do very well when we got to $60 uranium.
Wow, yeah.
And now we have $100 uranium. So you also kind of, depending on what your expectations are as an investor or as a business, you sort of think about these things like that too, right? But I think we're in a good position because, as you know, for years we said we were a buyer of uranium assets, and when prices got to 60, we'll restart production.
Yeah,
we were buying uranium assets between $20, $30 a pound uranium even $40 uranium. We bought assets. 60, the problem is the uranium price got to 60. It didn't last there that long, right? It lasted there for 60 days before going right up to 100 within 90 days, right? So, you know, positions us, I think, very well, because to run our business successfully, we don't need $200. That's upside. That's all upside. And we want to catch all of that upside, which is why we're unhedged. And we haven't signed long-term contracts, et cetera, because we don't want to have ceilings on our exposure to those, you know, bull case scenarios that are still playing out.
Yeah, actually, something that didn't have the markets in the past, in the 70s and in the 2000s, was the amount of speculation that I believe the narrative is going to attract on the uranium space, and it has happened already with institutions like Sprott, Suriinvest, etc. But I think it's going to come down to the Reddit crowd, etc. And yeah, the last part of the interview, I would like to touch a little bit on your three companies in the uranium space. Hopefully, we'll have 1 hour to speak among a lot of those, because incredible movements has happened in USC over the last 2 years, buying companies when it was out of favor and capitalize those gains now. But in Uranium Energy Corp, you are US based. In US, you have 2 operations. Now you have diversified among Canada as well. I would like to touch a little bit of the press release that you put, that production is going to start in 2024, in August, pretty much. And also a little bit of UEC on, just a little bit, because we don't have much time. But yeah, I think the company has a lot of run.
Yeah, I mean, listen, I think you know, in a nutshell, UEC is, as an 18-year-old business, has seen and done it all, right? We've produced uranium, which puts us in a rarefied camp of companies that have actually mined uranium. As a team, we have that experience. We had to shut our production down in 2013 after Fukushima because of low prices. And we made sure to take full advantage of the bear market. We acquired uranium mines that were on standby with our Uranium One acquisition. We acquired exploration resource stage projects with our UEX and Rough Rider acquisition. And we even signed long-term contracts to buy uranium at fixed prices of $40 and $50 and $30 a pound. So we have physical ownership. We have over 1 million pounds of uranium that's still contracted to come to us in the next 2 years with $45 cost in a $100 uranium environment. We took maximum advantage of the bear market. And like I said, we were making our acquisitions when uranium was at $20 to $40 a pound. So recently we've announced that we are going to restart our first operation back into production. That's the Christensen Ranch ISR project in Wyoming. A lot of the issues that I talked about in terms of headwinds to build new projects, we don't face when we go to restart a past producing mine. And so in this instance, we're not building a new operation. We're not building a new plant. These are all operations that were in production. Christensen Ranch was in production until 2018. And the processing plant that we're going to process uranium at, Irigaray, which is one of the largest in the United States, same thing, it's built. So our initial effort to go into production is shielded from many of those inflationary pressures and supply chain issues that you would face if you were building a brand new project. And so we're leading with what I think is the the best way to start production right now, which is brownfield restart, past producing, and in situ recovery, and in the US, where there's going to be a premium price because of the dynamics we talked about. We'll look to start that initial production in August of 2024. We're simultaneously working on our Texas mines that are also restarts to provide some news about when we can restart those mines. So we want to be in a position where in the next 2 to 3 years, we're able to show we're producing uranium from Texas and Wyoming and are growing that production. And it really puts us, I think, not only in an exciting place, but in a place of leadership of production in North America and in the US. At a time where, again, North American supplies and production is badly needed. And then we have the Canadian pipeline that comes right behind that. So when you look at our resource base of 328 million pounds of uranium, it's the largest diversified resource base in North America. And again, combines what I think are best in class. Best in class for low capital cost and low cost, which is ISR mining, and best in class for grade, which are the highest grades in the world in Canada's Athabasca Basin for conventional mining. So that 1-2 punch is how we've set up the company. US ISR, Canadian high-grade conventional, big pipeline of resource stage projects, and converting that resource space into a production pipeline. And starting with the US, and then in five years from now, I think we can even see Canadian production. So working towards that transition now, transitioning the company from having been a big acquirer of assets during the bear market, and now looking to transition that into development and production.
Yeah, in my humble opinion, is the best company in the uranium space, at least in North America, for a junior mining company. The value that it presented to shareholders years ago, it was nonsense. So yeah, actually, we had Scott Melby, the CEO of your other company, Uranio Realty Corp, so depressed in the market, almost 100 million in enterprise value, 250 million in inventory. Can you tell us a little bit of any plan, any catalyst for investor in Uranium Royalty?
Uranium Royalty is, I think, going to have a lot of catalysts because it's got the balance sheet to basically buy royalties, and which it has been doing. It has 20 royalties, and royalties on projects like Cigar Lake, McArthur River, two biggest mines on the planet, all the way down. But it's the physical ownership, I think, which is interesting too, because it owns almost 2.5 million pounds of uranium. At today's price. That physical ownership is almost 70% of the market cap of the company. So when you think about, normal, not like in the royalty business in the gold sector, all you get is the royalties, and that's the value of the company. Royalty companies in the precious metal sector don't own any physical gold. And here, close to 70% of the market cap is backed by physical uranium. I mean, that's beautiful in my opinion. And then the royalties are basically, the rest of it. But today, 20 royalties, that's going to keep growing. Both uranium royalty and uranium energy, UEC, are debt-free. I think it's so important to have a strong balance sheet that doesn't have debt, but strong liquidity, which, with UEC has over $200 million of cash and liquid assets. Uranium royalty has no debt and has also a very strong treasury and physical ownership. But look, I think when you look at the royalty model, it's a model that involves basically being passive, right? You own these royalties on these mines, and you don't do the work. You don't pay for land, you don't pay for exploration, you don't pay for labor. You just own a royalty, 1%, 2%, whatever it is, and that's it. It's fully paid for. There's no maintenance costs. And your G&A is very low. Uranium royalty has the lowest G&A in the whole uranium sector because it's got 4 full-time employees. And so there's a reason people like the royalty model, right? And that's why it's been such a successful model in the precious metal sector. And in uranium, there's only one company set up to provide that exposure, and that's Uranium Royalty. So I like that it's quite a niche. It has that first mover advantage, but it's the only one of its kind in the world. And it combining the physical uranium and the portfolio of royalties, I also think that's a really good platform that Uranium Royalty has. And at Uranium Energy, obviously, we're happy because we own 16% of Uranium Royalty, and it's done very well for us from our very first investment to now. So obviously, we have that, you can say bias, but it's a bias that's been quite rewarding.
If I would put I will only put Uranium Royalty Corp in the S tier of the investments in the uranium sector right now. I think it offers the best value at current prices. Actually, I knew Scott 3 years ago. I told how Uranium Royalty Corp had the privilege of the net asset value multiplier because Sprott or 3 Investors or those trade at just 1 times NAV, but these companies can trade at 2 or 3 times NAV. If they purchase the same thing, which is uranium, physical uranium, you have better purchasing power, right? But take a look at Uranium Royalty Corp. And last, to conclude, I would like to one thing of the RIA uranium project on the hands of Gold Mining Inc. I believe this is a company in the uranium place that you can buy it for free pretty much because the enterprise value is close to 0. Could you tell us briefly a little bit of that project?
Well, it's, gold mining is a company that, as the name suggests, is focused on developing gold assets, and it's done a very good job accumulating projects throughout the Americas, from Canada, US to Brazil and Colombia, and it controls today about 22 million ounces of gold resources, which is a significant resource space. But that company has also, through one of its acquisitions in 2013, which was a gold acquisition, that company that was acquired, called Brazilian Gold Corp, had a uranium project that was in Western Athabasca Basin before the discovery of the Arrow deposit and fissions, Triple R, et cetera, where it wasn't really, the western side of Athabasca Basin wasn't as exciting of a place to be as it is now. And this is the largest land package. It's called the Rhea project. It's 75% owned by gold mining, 25% owned by Uranio, basically the French government's nuclear company. And so today, when you look at Athabasca Basin, I mean, it's completely staked out. I mean, there's just no land left to stake because, again, this is the hottest area for conventional exploration of high-grade deposits. And gold mining controls not only one of the largest land packages, we're talking hundreds of thousands of acres of land, but has the partnership with the French, previous exploration that has been done that shows some great anomalies and targets for follow-up. And again, sitting on trend with the various deposits that are on the west side of Athabasca Basin. So I'd say it's obviously it's a unique situation because it's a uranium project that's hiding inside a gold company. Yeah. And it's one that I think gold mining plans to unlock value from by both raising awareness about it, but also taking action to advance the project, maybe spin it out, maybe sell it. So it becomes an interesting catalyst for gold mining, which is otherwise in a bit of a depressed sector. Gold equities are not doing really well right now. Yeah. Gold price is doing okay. It's over $2,000 an ounce, but gold equities are kind of not really working right now. And so it's interesting for gold mining as well to have such a large gold resource space, but have this value driver with the Rhea project. So stay tuned for more news on that as well.
Well, that's been a hell nice conversation with you, Amir. Hopefully we can have you another time.
Thanks for having me.
Thank you, Amir.
Take care.